Hang Seng opening after a holiday, and it is opening with sharp cuts. Prime Minister Modi as well as President Biden in their brief addresses outside the White House invoked the democratic values of the two nations.
44,042 to 44,083 is the resistance zone, the resistance area, which I think the Nifty Bank needs to take out.
The revenues were up 3%, yes. The operating margin came in at 14.2%. This compares with a number of 16.1% same time last year.
I don't think it's going to go. I thought 70 would be the low point, but let's say 65 could be a low point. I still believe it's $80 to $90 to the upside.
We go, the bell goes, and we are off to a negative start, 20 points lower, so it's not very bad. The question is, where does it go from here?
My sense is that natural time to take a breather, and that is what possibly we are kind of seeing in some of the stocks or even in the indices.
We have taken a very comprehensive outlook. Instead of forcing through a fab, we are focused on creating the ecosystem.
For a long time, we are seeing the midcap index underperform by a wide margin.
Orchid Pharma has gone ahead and launched a QIP. The company intends to raise up to 400 crore rupees. Remember, the base size of the QIP is 300 crore.
There is a bit of risk aversion globally. The dollar has become stronger and most Asian currencies are weaker. India, for instance, had to follow in the footsteps of yen and yuan.
The pressure continues. We are 70 points lower on the Nifty.
Well, that was the day so far. You're with us here on another edition of Closing Bell. This is Friday, so this is the last hour of this week in terms of trade. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, afternoon. We are not sinking, but it's looking a little wobbly out there. And we're not very far away, by the way, from the day's lowest point, which was made at 10 in the morning. So once again, actually, bulk of the day has been spent around the 18,700 level. A couple of hours above it, but not much above it. But around that's been kind of the average price level. I think 18,700. We briefly did breach the 20-day moving average, which was 18,660. That's the level we put out right at 8 in the morning. But that was only for a very brief while. At about 10 this morning, the 20-day, of course, is 18,660. Market breadth is negative. 2:1 is declines to advances. So it's pretty clear which way the momentum and the color is. And mid-caps and small caps are down 1% for the second straight session. So these are things which, market is not used to. Market participants are not used to. Dips have been always bought, and dips have rarely... they've disappeared in a few hours' time, but not now. So pay attention to the color, the texture of the market, and how that perhaps at the margin is changing. We've been pointing that out for the last 2 days. The 20-day is important, but I think we have to have a conclusive, decisive close under it. I mean, over the next 1 hour, if we do get a bounce again, you go into the weekend, see how US pans out. I mean, Monday could be a different day. So a decisive close under the 20-day, I think, opens up more downside from here on. Surabhi.
Prashant, absolutely. Yeah, it is almost an unusual phenomena that markets have completely forgotten, where the mid-cap index is down 1% and the Nifty is down less than 0.5% at this point in time. Speaking of where the declines are coming in, also important to note that we've got this gash on the Nifty 70-80 point cut without banks falling too much. So that's been an interesting one. The bank Nifty is actually trying to fight back and come back into the positive zone as we speak. Let's pull up the Nifty contribution plate. Yeah, that's the bank Nifty, and let's see if it can provide any more support to the market in the next 1 hour. But the contribution plate will actually tell us that today's selling has a fair amount of IT on it. Of course, the Adani group of stocks have been weak right from the start. Some of the metal names are down and out as well. Actually, in banks, SBI is the one that's taking it on the chin. It's down about 1%. But otherwise, it's not too bad. Infosys has been down. On the counter side, you have a Bharti Airtel, which has been one of the best performers. IndusInd Bank is looking quite interesting with the kind of gain. It's contributing the most to the index right now on the upside as well. And then beyond that, well, you have some stocks like an HDFC Bank, which are trying to fight back. But that's it. I think the more important and the more interesting headlines are in the mid-cap space, but on the way down today. So a lot of the stocks that had a great run-up, they're seeing a cool-off, whether it's the likes of an HCC, which had run up big time on the block trades yesterday. Today, that stock's down about 5% or so. Look at other names like Ramakrishna Forgings. On the volume chart, these are the ones which are seeing pressure. Voltas is down because of a brokerage downgrade. Varun Beverages, darling stock of the mid-cap boom market, is losing about 3.5% as well. Let's pull up the Adani stocks as I toss it to Nigel, because there's clear-cut pressure on a whole host of Adani names. Adani Enterprises down about 7-8%, transmission, power. Most of these stocks are down between 3 and 6%. So just fighting around the 18,700 mark for now, Nigel.
Well, that's right, 18,660. That's the mark that we pointed out earlier today, and we have bounced off that mark numerous times. Now the question is, will we see a sustainable bounce? Remember, global markets are in a tizzy as it is. I think the Dow for the last 4 sessions is in the red. So we need some stability on the global, cues front, and then maybe, in fact, we'll see a bit of a recovery from here. For the time being, it appears that we're resetting ourselves a little bit lower in terms of the range. So let's pull up the 18,700 call and the 18,700 put. You take the premium out then. The premium between both these two strikes, put it together, is roughly around 150 rupees. So from 18,500, you deduct 150 rupees and you add 150 rupees. So that's telling you that, 18,550 to around 18,850, that could be the range that this market is working with for the time being, going by the options data. But on the downside, it's extremely imperative that at least on a closing basis, we defend this 18,650 odd mark. Come back next week and the bulls will try to again fight back. So let's see how that goes. And the Nifty Bank, something's telling you that one has to fire from here on. That's done a bit of consolidation. I think last couple of weeks, it's not moved at all. So that one needs to fire. When that happens, then the bulls will be banking on the Nifty Bank to fight back. But otherwise, some profit taking is what we're seeing in the broader markets, which is par for the course.
Absolutely. I just want to point out US futures right now, they're down quite a bit. I mean, after yesterday's decline, we're seeing a further drop on the NASDAQ, actually. The NASDAQ futures are down about 0.7%. S&P, Dow, all the futures, US futures are lower. And so are the European markets, like Nigel pointed out. But the question is, what do we do now? The last 1 hour of trade, how do you position yourself? We've got Mitesh back with us. Mitesh, of course, had a short trade going on the Nifty. I'm guessing, Mitesh, that trade is still live for you?
Not only that still is live because, I have put a stop at about 18,760 and we haven't touched that. These are spot levels. But the good thing is that, or rather the bad thing for a short trader, is that we have not broken below 18,650 as well. So still the trade is in balance. Let's see how it goes from here. But yeah, I think, till that happens, either 18,650 breaks or 18,760 is touched on the upside. I think we'll maintain some put options positions in the July series. And on the stock side, Dr. Reddy's is something which I like as a buy trade. Buy here with a stop at about 49.50 and a target of around 5,100 can be looked at on the upside. And Hindalco is something which is turning negative and is breaking down. So Hindalco is on the sell side. Keep the stop at about levels of 416 and look for targets of 392.
Okay, all right. Thanks a lot for that, Mitesh. Well, for the time being, let's move on then. Voltas, that's the stock under pressure. UBS has come out with the note on the stock. And in fact, Surbi from our research team earlier as well had alerted us that they're losing market share as well as margins are under some pressure. Surbi joins us to give us the reasons why the stock is under pressure. Surbi?
So UBS has written on it and they've downgraded Voltas to neutral and they've also cut their target price to 840 from 1200 earlier. Now they say there's some industries blues that persist. Along with competitive pressure, there's also unseasonal weather. And also company has been losing market share for the last 5 years, and to regain market share while scaling up the margins seems like a tough ask, says UBS. They also believe that the rising competitive pressure will impact the margins, and that's the reason they've cut their FY24 and FY25 earnings estimates by 22 and 31%. Now, what has worked for Voltas in the last decade was that they were an asset-light model, which may not work in the future as the other peers are now moving towards developing their own manufacturing capabilities. Along with that, profitable ramp-up of the other products that they have, which is washing machines, will by FY26 seems like a tall ask, and the JV ramp-up is also much slower than what it was expected. So all of these reasons, which is why UBS has downgraded Voltas.
All right. Thanks a lot for that, Surbi. And good alert is what you gave us earlier itself when you compared the market share and compared the growth of Voltas in comparison with a couple of those competitors in the last few years. Prakash Divan is with us. Prakash, what do you think of it? Voltas, that used to be the big market leader. It's lost market share in the last few years, actually. Last few quarters, it's slipping. Growth is not as much. Margins as well under pressure. And it used to trade at premium multiples. What's your view on the stock at around 750 rupees? And would you still buy some other makers, or do you think now the time is right and you want to get into Voltas?
So, this is quite tricky. What happens is seasonality impacts these companies, and then, when the season is through and there's not much of an impact, we start looking at its engineering side of the business. So, there's always something or the other. I mean, this reminds me of Tata Motors when it was evolving after the JLR acquisition. Every 15 days, there would be some data point either from China or from Europe or from India, which would start impacting it, and the stock would just refuse to, take a smooth direction either upwards or downwards. Voltas is going to be in a spot like that for sure. If you look at where they've actually stretched themselves a bit too far is taking orders which take much longer to execute. So it's going to get a bit lumpy in terms of their revenue. I don't think the metrics of the industry are so bad that it would not be able to get some sort of a respite on its market share side. I mean, they still have a very strong brand and distribution strength. So I think this is a bit of an overdone thing. Earlier the price probably was a bit too optimistic in this brokerage report, and now they've probably made it much more real. But I would believe on dips it's a good company to add, because the cap goods cycle will also favor these companies which are beyond UCPs. So unitary cooling products is one thing which is much more for which is room air conditioners. But if they have cooling solutions like Pushkar and Volta, these are players who could definitely see a much more upside, even with data centers, even with the industrialization that's happening on the EMS side. So there's a lot of activity that could unfold. So I don't think there need to be so pessimistic about the thing. But of course, at the moment, it does look that it could face some sort of a overhang in terms of the slowdown in its core businesses, but it could give you that opportunity to buy at lower levels.
I think Amber, we by the way had the Amber management. Amber is a large EMS player, but bulk of the revenues come from the AC segment. I think they met some analysts yesterday, and they painted a pretty poor picture of what the season is panning out like. We had them on, I was just looking at my notes on the 23rd of May. And at that point, this is, of course, after the earnings. They, at that point also had said that Q1 will be muted. But I think the amount of decline the industry will see perhaps is a bit more as compared to earlier. Prakash, I'll come to you for what happens to names like Amber also, because these stocks have also seen 50-60% rallies in this quarter, starting April. But that's just a bit. Let's go across to Mangalam, who's standing by, and talk about Gillette, which is buzzing. It's up about 5% or so. Mangalam is here to tell us why. Mangalam.
Well, it's probably one of the biggest intraday moves that we've seen in a stock like Gillette. And this because, the stock has been absolutely languishing for the last so many years, and that's because the numbers of the company were languishing as well. I was just looking at the numbers. Last 5 years, the revenues of the company have grown at just around 5%. The profits have grown at just around 3% and the stock, as a result of which, down 4% this year. And in the last 5 years itself, it's corrected about 25%. Why is it? We all know. There was lack of frequency in men shaving. There was cultural acceptance, social acceptance of beards. And at the same time, the company wasn't present in electric trimmers and shavers, which was gaining traction. And then there came a fair amount of competition from new age D2C players. And they also sold their Duracell business to Berkshire Hathaway. However, now the interesting twist in the tale is that Nirmal Bang has written a note, and Gillette, which went with the tagline of the best a man can get, is actually gaining traction among women. Nirmal Bang says that channel checks and customer surveys indicate healthy traction and brand recall in the female grooming sub-segment. In fact, the continued growth that they've witnessed in their female grooming products is something which is an important trigger. They've also gone ahead and announced their foray into electric razors, epilators, trimmers, etc. And they've also gone ahead with their campaigns with influencers. To add to all of this, they've gone ahead and launched some premium toothbrushes too, so that would help them. So what the best a man could get, now perhaps women are gaining traction from that as well. So because the stock being languishing over the last so many years, Nirmal Bang believes that it's inexpensive at current valuations. They have a target price a little over 5,000.
Okay, all right. That's Gillette. All right, Mangalam. Thanks for the details over there. Very interesting take on why perhaps the market could be getting excited. Prakash is still with us. Prakash, I don't know. It's up. Mangalam, some days he tells us about all these new male grooming products, it's Beardo and all. Today it's women's grooming, which seems to be powering Gillette. What are your thoughts? Would you look at this one?
So Mangalam does give us a 360-degree view. He's given, what happens to the beard grooming products and the beard removal products. So I think Gillette as a company is very interesting. And I'll tell you, there's nothing that's changed overnight, for this kind of a motor war. And except for the fact that the market is hungry for stocks that have not run up or which are a bit expensive or within the realm of reasonable valuations. Here you have a company at 15,000 odd crores market cap, which I think it's at about 45, 46 times, if I remember correctly, on a trailing basis, right? Whereas rest of the FMCG majors were probably in the 60s and late 60s of PE multiples. Now PE multiples are traditionally always been high. They've always been high for these FMCG dominant product lines. And what's interesting is Gillette is actually in the last few years straddled the entire price point range. I mean, you have the Presto, which is disposable products, and the Mac 4, which is on the higher side, on the higher end. So both, if you see, they've got everything to fill in. The acquisitions they've made have been very recent, especially in the Indian context. So I think it's a great company that throws cash, doesn't really lose out on much wherever possible. Now, there's women shaving products and grooming products. You have a lot of other contenders, the Bombay Shaving Product Company, for example. Now, that's kind of making some inroads in its distribution on shelves. So you will find them compete with all of these and then still kind of get their market share intact. So it's a great company to buy on dips, but I think right now there's nothing particular to get things excited with this 4-5% move. But in the long run, I'm sure it will deliver value from here on as well.
Guys, in the US, there is a company, a very popular company now. I think they have a market share in the men's razor business equal to Gillette. I think it's called $1 shave or something. I mean, basically, the idea is that they will mail you at a certain, say, for example, if you choose, I want the razor delivered to my home every 1 month, and they will do it. Because apparently we forget. I do. So
what do I even say?
No, but to order a new razor because you keep sort of using the old one. Simple,
I thought you meant okay.
Simple idea, and they have, I think, from what I remember, they came out with these fantastic advertisements. You can watch it on YouTube, and I think they have a market share in the US now rivaling Gillette. I don't know if we have a concept like that here in India. And the ease is that they will send it to you home. I mean, delivered, say, on the first of every month or whatever. Sorry?
Will they be profitable?
Profitable from day one.
That depends on fashion trends and style. So, for a bit, we were wondering if shaving's gone out of style. But anyway, Gillette stock tells us that it hasn't.
At least from a studio perspective, it can't go out of style because, Shankar sir is...
It's the requirement.
It's a requirement. I've been here for close to 13 years and not a single day you can miss a shave.
We like it. We like it this way. On that note, we do have to take a very, very quick break, but we'll come back on the other side. India and US hope to forge a deep partnership in emerging and critical technologies, with semiconductors being a top priority. In an exclusive interview earlier in the day, Shireen Bhan caught up with IT and Telecom Minister Ashwini Vaishnav to discuss the need for creating a semiconductor ecosystem in India. Take a look at this. We'll take that break and come right back.
It's very important that we create the ecosystem so that the industry can grow sustainably. So the announcement of Micron to set up the first semiconductor unit in India is very important for us. So we decided to structure it in a way where we will be giving the incentive pari passu, $1 for $1, whatever investments they make in the construction of the facility, getting the plant set up, getting the entire ecosystem set up, that same amount we will be putting in the plant. On the Foxconn and Vedanta proposal, we have asked them to resubmit under the new window so that it can be evaluated afresh. And once they resubmit their proposal, we will be able to evaluate it and give the correct assessment. We promised to the country that within 14 to 16 months, we should have the first major breakthrough. And I'm so glad that our Prime Minister has guided us throughout this process. From every step of the process, he has taken personal reviews, he has taken multiple reviews, and today we are at a very good milestone, which is the announcement of Micron's first semiconductor unit. In the next 12 months from now, we should be able to have at least one more major semiconductor unit announced.
Welcome back. Here with us on Closing Bell, and we're looking at some more stocks in focus. The next company on our radar is actually UPL. Now, it has announced the transfer of its specialty chemicals business to its wholly owned subsidiary, UPL Specialty Chemicals Limited. We have Sonal joining in to give us the details of this reorientation. Sonal, do explain.
Thanks a lot for that. Well, it's one step ahead in the reorganization that the company had announced some 3 months back, where they spoke about how every business will be housed under a different platform, and they have taken it one step ahead. To tell you the news first, there is transfer of their specialty chemicals business on a slump sale basis. This is as a going concern to UPL Specialty Chemicals Limited, which is a wholly owned subsidiary of UPL Limited. The consideration for this one is 3,572 crore rupees. Now, company says this has been done in order to unlock shareholder value for the specialty chemicals business and accelerate growth in B2B active ingredient market, and this is something which they'll do via more partnerships as well. They will also scale up the specialty chemicals business, which was housed under UPL Limited at a faster pace. They expect it to be done in few months after shareholders approval. Now, how will the structure really work? UPL Specialty Chemicals, which makes the active ingredients, will transfer it to UPL Limited, which is the R&D and the manufacturing company, and this will be passed on to their other subsidiaries or the other platforms, which includes UPL Corp, which takes care of the export business, and UPL SAS, which takes care of the domestic business. So to simplify the structure, before this transfer that had taken place, UPL Limited was the holding company, which had 3 platforms: UPL Limited Cayman, which is the global business; Advanta, which is the global seeds business; and UPL SAS, which is the India crop protection business. UPL here also had the specialty chemicals business. Now, this has been sold to one of their subsidiaries. So after the transfer that has taken place, it will have 4 subsets, which will include the global business, the seeds business, the domestic business, and the 4th one will be now this specialty chemicals business. The UPL holding company will only have the R&D business, the formulation business, and will have investments in all these platforms. Maybe in future they would like to monetize it in some way, maybe demerge it in some way. That is something that we are still awaiting clarification on, but they have tried to simplify the structure here, and that is something that the management has been telling us for a long time.
Okay, got that. Sonal, thanks very much for the details there. That chart really sort of puts it in perspective, makes it very, very clear now that UPL, the listed entity, is now going to have 4 subsidiaries, with the specialty chemicals business moving to this new 4th entity. Prakash, yeah, we've got the graphics back up for our viewers to look at it carefully. Prakash, you tell us, what's your call on UPL overall in any case, and what do you make of this reorganization? I don't know. I mean, will it give rise to more expectations of maybe some value unlocking? Do you see that down the road at all for UPL?
So we, first look, and it does give you that promise of potential unlocking of value with some sort of a demerger. I don't know which piece is the one that would be looked at from the management's perspective. But these transactions, these kind of reorganizational moves are always fraught with a lot of ifs and buts and a lot of things falling between the cracks. So we'll have to look at. To be honest, I haven't had a chance to look at it in that detail to figure out if everything is kosher in terms of valuation and in fairness of the transfer to this new subsidiary. Because in the past there have been instances where there have been a lot of questions that were eventually answered by the management, but then the damage on the price has been kind of visible. So I would jump at it as being a very promising thing as yet. But though they'd announced this in the past, and it probably seems to be in continuation of a theme that they'd articulated, we'll probably believe that this is going to create some value. But I think there's a significant timeline to which this would happen. So nothing to be very excited about. It probably still is work in progress as it seems.
Okay, Prakash, thanks very much for that. By the way, I have to point out that market breadth has worsened a bit more. I mean, it's almost 3:1 in favor of declines. This is overall NSE. N. Jaykumar is joining us now, Managing Director at Prime Securities. Jake, it's great to have you with us here on the program. Good afternoon. Thanks very much. I know broadly and slightly from a medium to long-term perspective, you are bullish and, you are very constructive on markets. But here and now, after the non-stop rally that we've had all the way from March, are we set up for a slightly deeper pullback here, or you think that's unlikely? What's your sense?
I think the market positioning is pretty cautious. If you hear the commentary across the world, you hear commentary even in India, people are kind of almost logically expecting a correction. And that's usually never when the markets are accommodative, right? That they give you a correction when you're expecting it the most kind of thing. The fact is, in the short run, the markets are rich. There is enough and more which has been talked about, India being the manufacturing hub, money walking in here, etc., etc. Given all that, I think there's a fair amount of liquidity inflow that's happening right now. So it would surprise me, in fact, especially given the market positioning, how cautious people are, that there'll be a deep correction. There could be a time-wise correction where the markets may hang around in this range. I've been maintaining that taking out highs could be a bit of a struggle. It could technically take it out, maybe do a little more and then correct. But maybe with 18,000 as a base, a constructive move may still be a quarter away. But individual sectors and sector rotation is happening. And the principal reason for that is the delayed monsoons, in my opinion, which could be, in the short run, presenting India with a problem that it has not seen so much, like the rest of the world, which is inflation. Because through this entire crisis, Ukraine, etc., India managed bilateral trades, India managed bilateral deals where we've been buying oil well below market prices. Therefore, inflation hasn't really hit us. In fact, the government, has been collecting windfall taxes from some of the oil majors. Now, with inflation kind of topping out, I feel to some extent in most parts of the world, there may be one or two more interest rate hikes. But in general, I think inflation may be, at least on this run, coming to a bit of an end. But India has its own peculiar problem, because if there is going to be a disruption in agricultural production as a result of delayed monsoons, it could be in the short run inflationary. So we are in a sense meeting some headwinds which we least expected, because most people had taken monsoons as a given, in terms of being normal, etc. So that could be one worry, which is why banking sector has been broadly underperforming in recent times. We've seen this could be probably a beginning of a massive upcycle for banking profitability, better metrics, lower NPAs with higher PCRs, etc., indicating that banking profitability could be higher than ever before. But this could be a short-run deterrent, which the market's already factoring in as we speak.
Okay, so Jakes, basically you seem to be retaining more or less your constructive view on the markets, and you're expecting things to get better and the indices perhaps move higher over the next one quarter. Got that point. In the past, you've also been fairly optimistic on the manufacturing theme, a lot of the PLI schemes that we've seen in the recent past. That brings me to the immediate question, right? I mean, this high-profile visit of the Prime Minister in the US, and there's so much talk around technology transfer, defense is in sharp focus, and there's semiconductors. Now, semiconductor, I don't know how we can play that. Not sure if there's any kind of listed linkage, at least right now. But on defense, stocks have been already pricing in a lot of this enthusiasm. Many of them are up 300, 400% in just the last 12 months. So do you still find valuations comfortable, or is it getting a little too hot in the near term?
If I look around, Lockheed Martin goes at close to a 10 lakh crore market cap, $115 billion of market cap for something like a Lockheed Martin, which I view as the epitome of the defense industry in the US. If you see in India, most stocks are quoting at a tenth or even below. And if you think that the thesis is going to be that technology transfer manufacturing is now going to be the way of the future, rather than in the past, things getting handed down from there, or being manufactured there and we only as importers, then I think this thesis on defense could have a much longer way to go, number one. Number two, I do believe that a few mutual funds have had defense-focused NFOs, and those have, in a sense, meant that there's a greater demand for these stocks in the short run. But there are few and far between. As of now, it's a small universe of 6-8 companies, and some ancillaries to this which could be beneficiaries. But other than that, I don't think we've had a defense move for anything more than, let's say, a quarter or maybe 4 quarters at this point in time. But participation has been low. And I think with the government reducing its stake in things like HAL, there's more stock availability for funds and FPIs to get in. I think the defense theme has got a long way to go. We may have a price saturation for now, but I think definitely the theme has not gotten over. Numbers will get better and individual sectors can be played. So the way I see some of this is look at the largest in the world and see where they are and whether we can, even get to 20-25% of that size. And then you have, as I said, a runway that you can see visibly ahead after that.
All right. Hi, Jakes. Good afternoon. Good hearing your thoughts, Jakes. The new buzzword has been AI, artificial intelligence, and that's promising to be a big disruptor. What's your view on that and any plays from this space?
Well, I think it's not very clear, even at a global level. The truth is that AI and ML are, have created tools that are extremely high, almost high definition disruptors, if you will. They're eliminating industries. I mean, ChatGPT and the trailer that you've seen is only a small step in that direction. The big thing is going to be the tools that are leased out by folks like OpenAI and Google Brain, and Google DeepMind indicates that these tools will be available for people to better equip themselves for the future. So you have, in essence, very powerful assistants being created for your business. And there are businesses, I would say, like media, businesses like, anything which is done by rote are all going to get completely, taken to the cleaners. And even investments are sort of going to be looked at from an AI/ML perspective. So while the disruption is there globally also, there are very few companies you can actually play. People played NVIDIA because they make more chips, and greater chip demand would mean that NVIDIA would be a sort of an annuity play for a while. Indicates that people have gone into NVIDIA and made it $1 trillion stock just while they were even hunting for some kind of an AI/ML theme to be played into. In India, I think we'll have to look at a kind of a derivative of that. We, in a very small way, and I don't mean this to be a marketing pitch for Prime at all, but we in Prime have acquired or in the process of finalizing an acquisition, which is in public domain, of an AI/ML driven financial products company, which democratizes investments and decision making in the investment space for individuals, where most of these tools are largely available for people, in the big quant shops of the world, and they're meant for proprietary purposes, not for people at large, not for retail individuals at large, and we've attempted to do that. So in a small way, we've got into this, but I believe it's not necessarily that small, because I think the impact that we're seeing even early in the day in terms of tying up with brokers, etc., indicates that the space could be pretty vibrant in the days to come. So we'll have to evolve ideas that utilize this and we change the way businesses or decisions are taken. And that's the way AI/ML will have to be seen. A lot of businesses, even unknown to them, could just disappear overnight because there's technology. I mean, just a simple statement that, for instance, Sundar Pichai made a few days ago, saying, gone are the days of CT scans or MRIs, because we are going to introduce something which in a non-invasive way, you can see what's going on inside your body. I mean, it might be a very innocuous statement of 35 words, but I think the potency of that is so dramatic that you could actually have, the entire hospital business under threat at some point in time, not maybe tomorrow morning, not maybe day after, but pretty much in the near future. And the good thing about technology is, because it's available to everyone in the world almost at the same time, the adoption of that can be pretty dramatic in time frame. So given that, I think almost any business could come under threat. The medical profession is the latest one that's facing the heat. In the past, they used to talk about data invasion or data privacy and client confidentiality, etc. But the reality is that all these are only buzzwords to hold what is inevitably a machine-dominated world that we are walking into or have walked into.
On that slightly nihilistic kind of note, Jakes, we'll leave it for now. Thank you very much for joining us. But, I mean, you are positive constructive. I mean, some industries get disrupted, others will benefit, and the job of investors is to find, sectors which will do well, as you very well put it. Thank you very much for joining us with that perspective. We'll take a very quick break here. We'll come back and we'll tell you what's happening in dealing rooms. Nimesh will be helping us with that. And after that, we'll have our technical expert, what to buy or sell today for a reverse trade when we come back on Monday. That's coming up.
Welcome back. Well, some nervousness in our markets. We're virtually at the low point of the day. We're down close to around 100 points odd. What's going on, though? Let's shift focus to our special segment, D-Street Chatter. Nimesh joins us as always to tell us what he's picking up. Nimesh, take it away.
Hi, Nigel. As you rightly pointed out, at day's low and dragged largely by the large cap names, even the broader markets are relatively underperforming today. And the larger theme is that most of the outperforming stocks, whether it's in the Nifty or in the broader markets, they tend to be reversing larger and unwinding. So that's the overall feedback. Yes, the flows are going to be negative. That's the overall feedback as well. So there is, it's not only that the retail investors and HNIs are a bit nervous, but even from a flow point of view, it's a bit of a reversal from the FIs as well. So that's the overall feedback. I guess from a sector point of view, the pharma stands out in terms of buying interest back. So that's one sector which has relatively outperformed. And on the other side, technology is under pressure today on the back of weak Accenture guidance. From a technical point of view, I guess we are in this range between 18,400 to 18,800. It has to be decisively broken on either side for a larger trend. That's the feedback. But broadly, a day of consolidation continues. The flows are on the negative side, and a bit of caution as well from larger HNIs and retail investors.
All right, that's the overall sense and the mood getting into the weekend with a little bit of caution, I guess. Nimesh, but what about the deal street? It's the weekend. Tell me these investment bankers are finally taking a break. What's the chatter you're picking up today?
I'm not too sure about whether they're taking a break or not, Surabhi. But okay, in terms of individual names, though, the first stock on my list today is Minda Corp. That stock has been consolidating in a very narrow range of late, but now I believe there is a strong buzz that maybe you'll see a large order win for this company very soon. So that's something a lot of people are tracking in this company. So that's the first one. The second stock is UPL. Sonal did explain about the restructuring that the company has announced, but broadly the stock is under pressure on selling flows. So expect high delivery volumes on UPL today. So that's the second one. The third stock is Landmark. After a block, large block, nearly 10% equity change hands. The block happened in the block window, so there was no specific leakage, so to speak. But in terms of buyers, I believe some domestic mutual funds and domestic AIFs were buyers in today's block, and hence you've seen a big move in that stock. So maybe the disclosures could be important in Landmark. And the last stock is Bank of Baroda. Within the PSU Bank, this is one stock which is consistently getting marked for delivery on the buy side. I understand some long only funds seems to be quite active. We've seen some upgrades as well on Bob of late, but while the stock is down marginally in today's trade, there are buy flows even in today's market in Bank of Baroda.
Nimesh, on the chatter, there's usually one or two stocks where block deals are expected. Nothing today. How is it possible?
Well, Prashant, I just wanted to avoid this, putting out block deals every day. And now the problem is, there are so many chatter or so many talks about, at least on finger I can count you, I have a lead of at least 10 blocks which are going to come very soon. So now it's getting difficult for me as well to figure out which is true, which is not true. And hence I just wanted to avoid for a day, not putting out any block deal chatter, so to speak. But at least there are a buzz of 10 blocks coming in the near future.
Well, don't want to mess with that strike rate, and absolutely understand, Nimesh. Thanks very much for that, but interesting list nevertheless. Block or no block, and we'll keep a track of that. Mitesh is now joining in with quick BDST trades. Mitesh, the markets sold off. I think when we chatted, you were saying eventually we should get to 18,550 kind of levels, I think is what you said on the Nifty. So we are done 100 now. What would you do?
Prashant, I think that possibility of the decline still remains. I think 18,650 yet to be taken out, but this structure to me remains negative, and therefore I think I think traders can trail the stop loss now by about 20 odd points, get it to about 18,741, and then hope that it doesn't get cleared out, and eventually 18,650 gives away, and another 150, 170 points can happen on the downside. On the stock side, I have STVT on ACC. In fact, the entire Adani group stocks have been giving a very negative kind of candlestick pattern today. So some kind of breakdowns is taking place over there. So ACC, I would suggest STVT with the stop at 1780 for targets of 1750 to begin with. And the other stock on the list is STVT, there's a BDST called Aurobindo Pharma with the stop at 694 for targets of 709.
All right, got that. Mitesh, thanks very much for those calls. You have a good weekend, and we look forward to connecting again on Monday. Time to welcome in Sudeep Bandyopadhyay on this edition of the show. He's, of course, Group Chairman at IndiTrade Capital. Sudeep, good afternoon. Thank you for joining in. So finally, the bulls are taking a bit of a break. What do you make of the slight correction and profit booking that we're getting? And I just want to ask you that in mid-caps, are there any specific pockets or specific category of stocks where you would now advise profit booking?
I think, after such a great run-up, a bit of correction, consolidation is par for the course. And I don't see any major, challenge in that. I think it's a healthy trend, I would say. Of course, the hockey stand by the central banks around the world, the challenge on the IT front, which comes out pretty much every day. Accenture commentary was one more such, revelation. And a little bit of challenge on the monsoon front, delay, and what will happen, and question marks around the El Nino is a bit troubling. But otherwise, I think this consolidation, I would say, is a welcome trend, and it's a healthy development. Let the market consolidate near the all-time high and then take the next leap. I think that would be the ideal thing for the markets. So that's pretty much on the market. As far as the mid cap, small cap, and even the frontline stocks, I think there are enough and more opportunities in Indian market even now. And they talk about a market being overvalued, I think is kind of overdone. We have significant opportunities. There are pockets where there are very, very clear possibility of significant upswing over the next 1.5 years. I think one sector which has been talked about pretty much by everybody, which is the capital goods, infrastructure, construction, and I think one specific theme in that is cement. I think most of these do require cement and significant usage of cement. And this being a monsoon season, cement companies will remain probably subdued. And this will be a great opportunity for picking up good quality cement stocks at right prices for a 1 year kind of a hold. So some of the good mid-cap cement companies like Heidelberg Cement, Birla Corp, JK Cement definitely can be looked at current levels. You asked mid-cap, so I'm talking about mid-cap, but if I have to take a pick in the cement universe, probably I'll go for tried and tested Ultratech straight away.
All right. Hi, Sudeep. And the big trigger, I think, out there has to be that Sanghi Industries deal that's been waiting by. Couple of points: at what valuation does it get done? Because the promoter entity will be driving a hard bargain out there. And also, who gets it at what valuation? So 8 million tons potential capacity out there in the western part of the country. But let's keep cement aside. Let's talk about pharma names. We're talking about the markets being at the low point of the day. Dr. Reddy's and Auto Pharma have moved to the day's high. What's your pick from the pharma pack, or if you have a comment particularly on these two companies?
Nigel, I've been favoring the domestic pharma companies for quite some time now. And I maintain my view that I think somebody should look at domestic pharma opportunities much more closely. I think the growth there is secular and there is significant future growth opportunities as well. I'm not saying that there is a specific problem with Dr. Reddy or Oro or even Lupin. Yesterday's approval, which they got after a long time, I think is a welcome development. But the US pricing pressures and the competition in US is real. And I think it's going to be a long time before Indian pharma companies start getting that kind of leverage and mileage from US, which they were getting. So in the interim, it's better to focus on companies very much focused on India and getting most of their revenues out of India. The recently listed Mankind Pharma is one example. I think it is a great company with about 90+% of business coming from domestic market, and they clearly mentioned they have no intention of trying to do something great in exports. They will focus on India. So this is just a name, but focusing on domestic pharma companies would be the right thing. That's what we believe in the near future.
Okay, speaking of pharma, a lot of pressure on frontline pharma names. Now look at the Divis chart. Divis is down 2.5%, more selling coming in. The Nifty itself has lost over 100 points, and we're pretty much struggling around the lowest levels of the day. That's Divis, and lots of selling now in the final moments of trade. The Adani group of stocks continues to remain weak, and the others are, of course, banks, which are all over the place. Sudeep, what are your thoughts on IndusInd Bank? It had a couple of days of, sort of subdued performance. It was really under pressure for 3-4 days running. Today, it's a bit of an outlier. It's an interesting trade on this one stock. Any views or thoughts on the fundamentals?
Oh, absolutely. I think we like IndusInd Bank, and we like some other mid-cap banks as well. For IndusInd, I think there were a lot of challenges regarding the cloud, regarding the promoters and promoter stake and things like that. But I think that's out of the way now to a great extent. And the bank performance has been pretty good. The microfinance business, which they have through acquisition of Bharat Financial, has been doing pretty well. The asset quality challenges there has been a thing of the past, and the disbursals are moving up significantly. The CASA mobilization is strong. And the other very important thing is, we believe in this, the BFSI upswing. The beneficiaries for the medium to long term will be the banks which are able to mobilize liabilities in an effective manner. So the focus has to be on companies or banks which are mobilizing liabilities pretty well. The asset part is getting right. The quality is improving. Now the focus has to be on liabilities. And IndusInd has a vehicle through Bharat Financial for mobilizing liabilities in an effective way and going deeper and deeper. And that's going to play out. That's what we believe. So IndusInd is one of our favorite banks. We also like Federal Bank. I think that's doing pretty well. And the gold loan business, which they are aggressively getting into, is going to yield results for them in the near future.
All right. By the way, the market's back under 18,660 for the second time in the day. The first was early in the morning at about, I think, 9:40, around 10 o'clock basically in the morning. We had a slip below that 20-day moving average, and now it's appearing once again towards the fag end of the trading session now. So we're down 120 points, 18,654.55 is where we are at. So let's see. I mean, if we get a close around this, or maybe a little bounce towards the end, but we'll pick up on this. By the way, two other stocks, right? Look at Piramal Enterprises and Shriram Finance. Both had euphoric 10% moves post the block deal, where Piramal basically exited its stake out of Shriram Finance. The next day, both stocks were up 10%, retraced intraday, but with yesterday and today's price action, these stocks have completely retraced that move. So they're still okay for the week, for the last fortnight or so, but the immediate reaction post the block sale, that's been retraced with what we've seen yesterday and today. We'll slip into a quick break here, but just a quick programming note for all of you. Our weekend special editors roundtable is coming up at 4:30. We get you a quick preview of what the themes are for today's show. Spotlight will be on the electronic manufacturing services space. Stocks have seen big moves and have been trading at record highs lately. What's working for them? Nimesh will get us the details.
Also focus on the HDFC twins with the merger coming up. Is it time for a rally in these stocks? We'll get your comprehensive analysis.
Well, it's raining block deals as well on the large trade. There have been $2.2 billion worth of block deals so far in June. Nimesh will get us up to speed with all the action. We'll also be joined by Mihir Vora of Max Life Insurance on his take on the market. So don't forget to tune in to CNBC TV 18 at 4:30 p.m. later today.
Okay, welcome back. The Nifty on your screen down 113 around the 18,660 level. Sudeep Bandyopadhyay is still with us. Sudeep, I was just mentioning the Piramal and Shriram stocks before we took that break. Do you own any of them? Have a view on these stocks? The euphoria to try and buy these stocks right after large blocks changed hands, it kind of defied logic for a moment, although, when the stocks are up, they're up. And rates are what they are. But what do you make of both these names? Shriram has been an underperformer in the financial space. And of course, Piramal Enterprises, we all know how that has fared over the last 2 years or so.
Well, I think, both these stocks were under significant pressure. And, the transactions which happened in Shriram, first the TPG exit and then Piramal exit, were good because, the overhang on the counter went away. And as far as Piramal is concerned, I think the cash which came in is definitely welcome. We know Piramal has been trying to diversify out of wholesale and real estate exposures and focus more on retail. So this cash will definitely come in handy there. We'll have to still see how they are going to put this cash to use. But at this stage, I think we are not involved in either of these counters. And as far as advice is concerned, I think I would still look at Shriram because it's a pure play business. We know the businesses they are into. As far as Piramal is concerned, we'll wait and watch.
Okay, well, wait and watch. Thanks very much, Sudeep, for joining us. Good speaking with you. It's Friday, so weekend ahead. Have a good one, and we'll speak with you next week. Thanks indeed for joining us. Well, 18,660 is where we are leaving off. So what do you make of this closing? It's neither here nor there, not under, not above, exactly at the close. And I don't think the adjusted close will be vastly different or anything. Maybe a little lower, let's see. But we've got the market closing basically at the 20-day moving average. 62,959 on the Sensex. The Nifty Bank on your screen about 0.25% lower. So the Nifty Bank actually doing a little better than the 0.5% cut the Nifty has seen. For the week, I think the Nifty will be down as well, about 0.8%. And I think the Nifty Bank will come up on your screen. For the week, the Nifty Bank is down about 0.75% as well. The small cap index ends down 1.25% for the second day in a row, more than a 1% cut. And it's a 1% cut for the week as well for the Nifty Bank. The Nifty midcap index, well, let's just take a look at it. Similar, 1.25% cut today, and for the week, down exactly 1%. Surabhi.
Well, Prashant, I'm just looking at the large cap screen to figure out where the bulk of the declines came in from. Metals were definitely a weak spot in the market. With so much of uncertainty, interest rate hikes coming in many parts of the world, the Chinese central bank not doing too much beyond the small cuts that we saw. So Hindalco down about 3% today, Tata Steel down 1.5%. Beyond the Nifty, if you look at stocks like Nalco or SAIL, most of them have had a red close today. So metal is definitely a down and out space. In terms of the heavyweights that were falling under pressure, SBI, Infosys, L&T, these are some of the big boys that were dragging their feet pretty much throughout the session. Let's pull up Reliance Industries, even Reliance down a whole 1%, TCS, ITC. None of your big batsmen were coming in and playing a good innings today. That didn't really happen. Maybe an Asian Paints was trying to do some damage control. Bharti, Airtel. But clearly, Nigel, it wasn't enough.
It wasn't enough. But, talking about the lighter weights, they did pretty well. Some few stocks that did well. 63 Moons went off to the moon, was up close on 20% today. Anthony Waste Handling, that stock was up close on 20%, locked in upper circuit. LG Balkrishna Brothers, remember the fear was that in the post-EV world, most of their products will not be needed. I understand a couple of brokerage notes have come out, some visits as well to the management, and the stock in this week itself, it saw a big run, 25% up in this week. That's LG Balkrishna, should come up for you on the screen. Landmark posts that large trade was up close to around 9%. If ICICI Securities that is up close to around 9% in trade today. And TD Power as well, a play on the capex cycle. If you're going to be putting up a power plant, you'll require a generator, which they make. So that stock was up close to around 7%. And Natco Pharma as well goes home with a gain of around 7%. So select winners, Surabhi, though this headline index was under pressure.
Well, that was the way the week has closed out, with a bit of caution coming back in. We have a weekend coming up for the bulls to digest all of this. So it's a wrap on this edition of Closing Bell. But don't go anywhere because the action continues. Our Friday special, Smart Money, coming up after this break.